Hello everyone, welcome back to my channel Crypto Update. If you're new here, make sure to subscribe as well as click on the thumbs up button and leave a comment below. BlackRock, the world's largest asset manager, plans to invest $9 trillion into XRP, sending its price to $397 by March. However, this bold assertion appears to lack credibility. BlackRock manages an impressive $9 trillion in assets under management, encompassing a broad portfolio of stocks, bonds, ETFs, and other investments. However, there is no evidence to suggest that the firm intends to allocate this entire sum or a substantial portion of it to XRP. The figure represents BlackRock's total AUM, not a specific investment plan. The claim seems to have originated from exaggerated or misinterpreted social media posts. While BlackRock has expressed interest in blockchain and cryptocurrency technologies, there has been no official statement or credible report corroborating the rumor of a massive XRP allocation. Misinformation in the cryptocurrency sector can lead to unwarranted market speculation, hype, and potential manipulation. Investors should exercise caution and rely on verified information from authoritative sources to guide their decisions. While the rumored $9 trillion investment lacks substance, the XRP ecosystem continues to expand. For instance, BankSchange recently launched a $1.1 trillion market on the XRP ledger, showcasing the platform's growing utility. Additionally, institutional interest in XRP is evident, with multiple applications for XRP-based exchange-traded funds. Grayscale's Spot XRP ETF proposal faces delays, with the U.S. Securities and Exchange Commission extending its review deadline to May 21. This marks the first time the SEC has acknowledged an XRP ETF application, with other asset managers like WisdomTree, Bitwise, and Franklin Templeton joining the race. Franklin Templeton recently filed to establish the Franklin XRP Trust, which, if approved, will be listed on the CBOE exchange and use Coinbase custody as its custodian. These filings reflect a growing trend toward offering regulated investment vehicles tied to digital assets. The rising number of applications follows the success of Bitcoin ETFs, which collectively manage $95 billion in assets. Many industry insiders view these ETFs as a key step in enhancing market transparency and investor protection. Despite regulatory hesitations, optimism persists. Analysts at Bloomberg estimate a 65 to 75% chance of XRP ETFs gaining approval in 2025, and betting platform Polymarket places the odds at 72%. Investors are hopeful that a clearer regulatory framework will unlock new opportunities in the digital asset space. A market expert has shared several reasons why BlackRock has not yet filed for an XRP ETF despite multiple filings from other asset managers. Despite a growing wave of institutional interest in XRP-backed exchange-traded funds, ETFs, BlackRock, the world's largest asset manager, has yet to throw its hat in the ring. For context, multiple asset managers such as Grayscale, Bitwise, and Canary Capital have collectively filed to launch about 15 XRP ETF products, including spot and leveraged ones, the most for any single asset. However, BlackRock remains hesitant. A recent breakdown by the analyst reveals a look at why BlackRock continues to sit on the sidelines, even as competitors like Grayscale, Franklin Templeton, and Bitwise step forward with filings. One of the major reasons is the firm's current dominance in the Bitcoin and Ethereum ETF space. With their iShares Bitcoin Trust crossing $30 billion in assets under management and the Ethereum ETF reaching over $1 billion within just 2 months, the company sees little incentive to shift focus to a less established asset like XRP. Notably, another point of concern is regulatory overhang. Although both the Ripple and SEC have agreed to drop their appeals, the lawsuit hasn't officially concluded. For a conservative institution like BlackRock, the lingering uncertainty remains a sticking point. Institutions tend to be risk-averse, and the SEC's past classification of XRP as a potential security still casts a shadow. Moreover, BlackRock appears to be applying internal benchmarks that XRP hasn't yet satisfied. These include factors like liquidity, institutional demand, and overall legal clarity. While XRP has shown progress in all areas, the asset reportedly falls just short of the firm's threshold for a new ETF product. BlackRock seems comfortable allowing competitors such as Grayscale and Franklin Templeton to test the waters. It will observe how the SEC responds to those filings and gauge overall market appetite before entering the XRP ETF space later. Meanwhile, another reason for its hesitation dates back to a fake XRP ETF filing in November 2023 that falsely linked BlackRock to the product. That incident caused confusion and forced the firm to deny involvement publicly. According to the analyst, that episode may have contributed to BlackRock's current cautious stance, especially in terms of public perception. Further, XRP's current market share also plays a role. Bitcoin and Ethereum still dominate the crypto landscape, making up the lion's share of trading volume and institutional interest. Compared to these leaders, XRP's lower liquidity and smaller footprint make it a less compelling option for a firm seeking to launch high-demand products. However, XRP is gradually gaining ground, having outperformed ETH by 262% since last November. XRP is currently $74 billion away from overtaking Ethereum in market cap rankings. Another factor leading to BlackRock's delay is likely a lack of demand among institutional clients. For context, the asset manager typically builds products in response to client demand, and at present, the analyst believes that demand does not appear strong enough to warrant action. This is all for today. Thank you for watching.